just want to get started here. We're going to talk about VA loan financing and how you can use your VA benefit to buy a home, a multifamily home that you can use for investment purposes and go a long way in helping you reduce the amount of money you pay every month for your residence, for your place to live, and also how to build long-term retirement income, savings, a better position financially with having real estate as an investment. So our team is, we call ourselves the Mortgage 411 team. And what we are is we are committed to helping our clients, especially our veteran clients, in understanding all there is to know about buying a house, buying an investment property, and all the details that go along with it. So I would like to just say that these calls work very well with questions. So if you have questions, we'll take a pause every few minutes, every 10 minutes or so, to see what questions there are, and we'll keep rolling. So as mentioned, we are the 411 team. I'm Dan Ventura. I've been doing this since 2003. And then the rest of my team are Molly Stearns, who's been with me for 5 years, 6 years. Samantha Bomba has been with us about 7 or 8 years, looking for confirmation from Samantha. Yeah. And then Catherine, who just joined us 2 years ago, is on the fast track. She started as an intern, and now she's basically running the entire office. And we call her our CEO, our Chief Everything Officer. That's a title stolen from Shalimar, but that's what Catherine is. Another name that we could use to describe the team would be Beauties and the Beast, but you know, that's that. So we're going to just dive right in here. As mentioned, we're here to talk about real estate. The market right now, as you've seen, is absolutely ridiculous. We started the year at 2.875 on a 30-year fixed rate, and now we're near 7%. Never in the history of time has there been that rapid of an increase in mortgage rates. And combine that with the problem that we still have to some degree, of a reduced inventory, it kind of led to the perfect storm where values, rates, and everything caused everything to increase dramatically, that a lot of us feel that increase is not sustainable, and that we are looking at a pretty sharp decrease in prices over the next 12 to 18 months. Okay. So an example, at the beginning of the year, somebody that was pre-approved with us at 2.875 could qualify for a $700,000 home. Right now, same circumstances with the rates being different, they can qualify for roughly a $450,000 to $500,000 loan. So the rates and pricing has a lot to do with one another. So what we're seeing here, this was an article in Fortune magazine that said there are pockets in the country that are overvalued or undervalued. Okay. So undervalued is not going to be anywhere near here. There's just a little tiny pockets isolated throughout the country. But what we're looking right now is, because we're all in the Northeast, is what does it look like for us here locally? So if you see this chart right here, these are the negative numbers. The overvalued right here, Massachusetts, down the Cape, we're going to be in the 18 to 25% range of being overvalued. Okay. So what does that mean? That means that you're going to start to see more inventory hit the market, and you're going to see price drops. Now, all of us here on the 411 team are all actively looking at purchasing investment property. So we sign up and we get alerts, and we're going to show you a couple of properties that are on the market. One of which has substantial price decreases in the past 30 to 60 days. And I feel that trend's gonna continue. Okay, so that's the reason why we're here. This is the reason we're passionate about it. It's the next 12 to 18 months is going to be the time to get active in real estate. And you know, hopefully this webinar will answer any questions that you have. So we're going to just start at the basics. We're going to not dive too deep into every single category. I just want to spend as much time as we can on the investment piece. So VA financing is it's 100% financing. We also can call this no money down, 0% down payment. So it's 100% financing for our veterans. We have lower rates and payments. The VA loans have lower rates and payments than our regular conventional loans or any other type of loan product. And a good thing about VA loan, as we're going to take a look at some rental properties that are on the market, is that you can use rental income from the property that you're looking at purchasing to help you qualify to actually buy the property. So that's a really unique advantage that we have available to us. And then lastly, here we have common sense underwriting guidelines for our veterans. This could be, lower credit scores, higher debt to income ratios than is typically allowed. And they do just have a lot of variances and parts of the loan program that are really common sense to help out the veteran. So what do you need to get a VA loan? You have to have a certificate of eligibility, and you can go online and find out how to get one of those. If you don't know how, you can just Google how to request a VA loan home certificate, and it'll just give you all the information here. It's a very easy thing to do. We pull them all the time for our clients. So it's nothing out of the that's too tough. And then the other thing that we would need is your copy of your DD 214, which to be the list all your service dates and all that good stuff. Okay, so we have a sample of what a certificate of eligibility looks like. This is for our veteran John Doe. I've highlighted a few of the important things on the certificate of eligibility. The important things that we look at are if you are exempt from the funding fee or not. I'll explain that in just 1 second, what that means. And down here is the important things that we look at. Every veteran has entitlement of $36,000. Okay, this $36,000 in entitlement is basically a pledge by the VA that allows you to buy the house with no money down. And if there ever is an event of foreclosure or a short sale or anything like that, the insured, the $36,000 goes to pay the lender who is holding the loan. So it reduces their risk if that unlikely event should happen. So when we qualify a veteran buyer, we take a look at what the entitlement is. And as important, what was charged, kind of squeezed in on the bottom, what was charged on any previous loan, because there is a difference in funding fee if you use the VA loan program the first time, or if there is subsequent use of it. Okay, so VA purchase loan, if you're going with 0% down payment, you have to pay a VA funding fee of 2.3%. If you use it again a second time, you have to pay 3.6%. I know this is confusing, so I'm going to show you an actual example once we get to the investment property piece of things. So this is a funding fee. If a client is exempt, they pay no funding fee. And if they are using it for the first time, it's 2.3%. And then again, for each subsequent use from thereafter is 3.6%. So the type of properties that we can finance using a VA loan has to be residential in nature. Okay, you can buy a single family. You can buy a 2 to 4 unit. This is my favorite. This is why we're here. So I'm going to keep looking over at that. 2 to 4 units. And then you can buy a condo as well. It has to be VA approved, but condos are a very popular product for a lot of reasons. Lower cost, lower, just to set it and forget it. You don't have to do any like maintenance typically outside of that kind of thing. So I'm going to talk about a case study. I worked with a client, a veteran buyer. He's a firefighter. He was a paramedic, doing all those things. Served over at over in Afghanistan, and wanted to just get into real estate. And so we met and we talked about it, and he ended up putting an offer in and buying a 2-family house in Haverhill, Massachusetts. Okay, so he bought a 2-family in Haverhill with no money down. He lived in it for a year, and then we refinanced him out of his VA loan into a conventional loan using the numbers from the property, the rental that he had already had in place there. And we were able to refinance him into a conventional loan, which then, because we paid off his VA loan, it actually restored his VA benefit. Okay, with his VA benefit restored, that means he's eligible to use it for another property. And he did. He bought a 2-family across the street from where he is, moved across the street, and rented out both units of the first house. And he's going to do the same thing. You know, rates had a different answer to his strategy this time. But over the next 12 to 18 months, we're going to be right back here doing that for him. He's going to refinance out of the 2-family into conventional, and then he's going to free up his VA benefit to be able to purchase again. So in a course of 12 months, he not only has himself a place to live, but he also has 3 units providing rental income, and more importantly, or as important, tax deductions. Okay, so tax deductions, which I'm going to cover in pretty good detail in a little bit, reduces the amount of taxes that he pays, and he's just in a really, really good spot right now. Buying the first 2-family a couple of years ago, paid $485 for it, easily worth $650 to $700 right now. So he's got equity there. And it's just been a fantastic situation for him. And that's what we want to do, is we want to teach our veterans how to buy a property, how to set themselves up for the end game, retirement, having an income, and basically having all the available options that buying a multifamily investment property has to offer.
There is a question, and one of those questions is about eligibility and if somebody's significant other can qualify.
Okay, Samantha, you want that one?
Sure. So in order for a significant other to go on a VA loan, you have to be married. So you could not have a girlfriend on your VA loan.
And then in terms of surviving spouses, can you just go over that quickly?
Oh, yeah. VA loans are completely assumable, and a surviving spouse would be eligible for that loan to be, transferred over to them. So yeah, very, very good question.
I was under the impression that if you want to restore your VA benefit, you have to sell the property. What you're saying is you don't have to do that. You just have to refinance it to a conventional loan.
Yes, sir. Yep. You definitely just, all it is about paying off or extinguishing that prior VA loan. Good question. So now we're going to take a look at some fun stuff. So there's a property in Salisbury, Massachusetts that we've been keeping our eye on. And when I say keeping our eye on, I mean seriously looking at all the properties that are hitting the market. And this is one that's been on the market for 89 days. And if you take a look over here, you can see this thing was initially listed for sale in October. Okay, so here we are, 37 days later, and we're down to 550. They started at 665, 625, took it off the market, try to fool everyone, come back on at 575, took it off the market, and then they came back at 550. So that's something that obviously gets our attention in a major way. It did not get our attention at all at 665,000. But when you see such a rapid price drop like that, that could mean opportunity. And these are the things that I want you all to pay attention to and take a look at, because this could be an opportunity to purchase a house at or below fair market value. There may be a situation where the people want to get out, have to move, and just nobody's interested in a 2-family down Salisbury Beach right now. But as investors, we are interested in that. And I think Catherine was trying to get us a showing, take a look at that at some point tomorrow. So there's that. So I want to show you what this house looks like from a perspective of if you were to buy it. Okay. pretty generic Salisbury Beach house, all close together. Nothing fancy, nothing terrible, okay? So how does the numbers look on a house like this? So what I'm gonna show you right here are the numbers, okay? This is based on today's interest rate and the purchase price that is on the listing, okay? So we're showing the listing price right now at $550,000, okay? If the purchase price is $550,000, then Dan, why the heck is the loan amount $562,650? Well, this is that funding fee that we talked about a few slides ago, that in this case, I'm using an example where it's a first time use for a veteran, and the 2.3% that I mentioned that had to be paid, it does have to be paid, but the good news is that it can be financed. So you're not actually taking it out of your pocket and paying it at closing, but rather you're adding that amount to the balance of the loan. So you're buying a house with no money down and you're starting out at 562. So technically the house is underwater for the first couple years. That's just part of how the VA loan program works. The monthly payment, if you were just to buy it as is, the monthly payment would be $4,250.04 a month. Now that's not good at all, right? So we're showing the breakdown of what this looks like. Principal and interest is 369621. We've got the property taxes included in here, very low property taxes at $303 a month. And then we're using an ultra conservative number for the insurance. It's close to the ocean, so there will be a flood policy, and then you need regular homeowners insurance. So all that, all included, is $4,250 per month of your mortgage payment, okay? So on your own, you're not gonna buy a 2-family and then not generate any type of income from that. So what we're gonna show you next is the house at 30 Old Town Way in Salisbury with rental property, as a rental property with an annual lease on the unit next door, okay? So what we're gonna do now is we're gonna take the assumption here that we can rent this unit annually with an annual lease of $2,200 a month, okay? So showing a conservative amount of $2,200 a month in rent, that knocks your participation or your end of the payment down to $2,050 a month, much more manageable. For each month that the property is rented, your out-of-pocket expense for the home is $2,050.04. So you can immediately see how you can double your leverage by purchasing a multifamily and having tenants fill in the gap and pay the mortgage as well. So the other thing I wanted to show is Salisbury Beach. You have a lot of people wanting to vacation there, okay? So when we look at properties and we analyze the rental income possibilities from that, we take a look at everything. Now, Catherine on our team currently manages a property down Salisbury Beach as an Airbnb and has experience with that. I personally have owned rental properties that we have Airbnb'd, and I'll be the first one to tell you it's not easy, but it's worth it, okay? What I mean by it's not easy is sitting down to dinner on a Friday night and so-and-so's gas tank runs out or whatever. That's all part of it. And that's all has to be expected and prepared for as you as you head into this. By using this, our average monthly rent goes to $3,800 a month. Okay, so $3,800 a month. This is if you short-term rental, Airbnb, maybe did a 6-month lease through the winter, but our numbers are very, very conservative. But this type of property, we feel one unit on the opposite side of where you're living can generate $3,800 a month in rental income. And that's going to drop, if you decide to Airbnb it, that's going to drop your monthly end of it down to $450, okay? $450 a month for you to live and manage your property as a business, which it most certainly is 100% a business, okay?
Can I reuse my VA benefit?
Yes, you can, just like Dan showed in that case study. Obviously, you can be refinancing into a conventional loan, but you can reuse your entitlement.
Do borrowers have to wait until they're no longer active duty? Do they have to be retired from service? Can you just clarify that?
No, you don't have to wait. You can be active duty, retired, separated from service, all the above.
Is there ever a status that can't qualify?
Just not being a non-veteran. I mean,
Okay.
just, yeah, you either have the benefit or you don't. But active duty veterans do get a reduction of the funding fee if they have to pay for it. And there's a couple other things that they get as well. So there is special consideration given for active duty and, you know, retired. I mean, I had a client use his VA benefit for the first time. He was near 60 years old. So it's just a lifetime benefit. You can use it whenever you need to.
Does a borrower have to pay the funding fee again if they refinance their mortgage?
So they do have to pay if they're refinancing into a cash out VA loan or a standard refinance for VA. If the VA has a great product that's a streamlined refinance, so it's just rate and term. If we were to do that, it's a reduced funding fee.
It's not just for purchasing the home. There's also programs for if you want to refinance or if you just want to reduce your interest rate.
Yep.
That are also promoted and
Encourage.
specifically geared towards veterans and
Yeah.
active service.
Yeah.
Correct.
Yeah.
Okay, awesome.
Samantha, what if they refi out of a VA into a conventional loan?
So if you're refinance, like the case study, refinancing into a conventional loan, you would not have to pay the funding fee. It would strictly be a VA loan.
What type of inspections are needed? And if there's an approximate cost associated with those?
Yeah, in most states, pest inspection is required. And then also if you have a private septic or well, that will need an inspection as well. And then also your appraisal.
What type of pests are they inspecting for?
Wood dwelling insects, so it would be the infamous termite clan. So they want to make sure. So the whole impetus behind the VA loan and the inspections are to protect the veteran, to make sure that the home that they are buying is solid and it's sound. So the appraisal that happens is a very detailed inspection as well, and it's done on behalf of the veteran to make sure that they don't have problems after they buy the house, because that's the last thing that anyone wants. So it's a very detailed report that they do. And if there is a safety issue or something that doesn't meet the VA requirements, the appraiser will require any specific items like that to be completed by the seller prior to closing. Okay, so what does that mean? We're all about safety. Okay. If there's broken glass, we want it fixed. If the stairs are cracked or, the concrete up to the stairs, it could cause somebody to fall and get hurt. We're going to want that fixed. If your stairs have no railings, we're going to want railings put in because we don't want anyone to trip and fall. So the VA appraiser is, as we are, an advocate for our veterans to make sure that the property that they're buying is safe and is sound and, won't have any issues or cause issues down the road.
Does this type of loan program take longer to close?
No, it doesn't.
There's misconception out there that VA loans are harder to process, more paperwork, tougher. The answer is no. I mean, the appraisal is tougher, but I will argue all day long that that is just a really, really good thing for the veteran. But, there will be, let's talk candidly though, there will be some realtors out there that, will be a little leery of the VA because of the, no down payment. And when those situations arise, we ask for you to reach out to us so we can advocate on your behalf with the realtors. And, we have a very highly successful track record of, getting veterans offers accepted because of the, what we do, what our reputation is, and, everything that goes along with it.
Before folks go out and start looking at homes, what's the very first thing that they should do before they go and look at that?
Reach out to Molly or Samantha, or both. We all work as a team. you want to get pre-approved. You want to take a look at your credit. You want to have a lender take a look at your credit, because if you're using a self-pulled credit report, such as Credit Karma or any of the other ones, there's a million of them out there. They use a different scoring model than lenders use. They use something called Vantage Score, whereas we use FICO, and we have since the 70s. Okay, so you want to get a pre-approval. A pre-approval will be valid for 120 days, and it'll allow you to take a look at where you're at, where your scores are. If we take a look at your credit report and we identify a couple things that we could do to help get your credit score up a few ticks, maybe get a lower rate in payment, that's what we do. We, like I said, we advocate for our clients, and we work to make sure that you get the very best terms and lowest rates and payments that there are.
What is the minimum requirements? What things would you ask for them? Obviously, it's going to be their personal information so that you can pull the credit, but is there any other supporting documentation that you'd like to see when you're getting someone pre-approved?
Yeah, a copy of your photo ID. We need to know you are who you are. You know, and depending on your income, if you have, you know, disability or any type of income from the VA, there's VA awards letter, they're called. You know, if you're a W-2 employee or self-employed, you know, subsequently, we would need the W-2s, pay stubs, tax returns, that kind of thing. All the basic information that you could hope for, okay? We take a look at case by case. We don't just have an automatic answer, like if you fit in this bucket or that bucket, this is the required answer. The veteran may say that, you know, I was out of work for 8 months because I took a course and I wanted to get better at whatever, and then I went to take a job. If it was in a different industry, because of that letter of explanation, we would at that point be able to use that income for qualifying. So it's, like I said, it's very human. It's very understanding of a veteran's needs.
In regards to the funding fee for first-time VA loan users at 2.3%, the chart indicated disabled was at 0%. Are qualified disabled veterans exempt from that 2.3% funding fee?
100%, 100%, and that's what is indicated on the certificate of eligibility, the COE, as us cool kids call it. If you are disabled, you are exempt from it. This certificate will confirm that for us. We talked about our client's journey, our veteran, and you know, what he did and what was he was able to accomplish, living in the property, renting out one unit, moving across the street, then renting out both units. So what if we did that in this particular case? What if we turned both sides of this? You know, we lived in it for a while. You know, we were able to refinance out of it, get into a conventional loan. And what if we just rented out both sides of this? What would the numbers look like there? And I think it's going to be pretty impressive. So if you were able to then Airbnb and have your full-time business could be, you know, your rental property, you could turn this into a $3,300. This says negative because that's how much it costs you each month. Negative 3,349. What that means is it's positive cash flow for you for the property in the amount of roughly $3,300. Okay, we're going to talk in a minute about how we should treat a home like this once we get to this point. But what you've done right here is you've managed to buy a house, build up some equity, refinance out of it, and turn your home into a business that's going to generate income. So a two-family home, there are many options that are available to you. You can literally divide this thing into two different condos. You can have two unit condos that would sell for more than if it was a single family. Obviously, the house would need a hug. I don't know if blue stucco or blue concrete block is a real popular outside, but again, you know, every house is going to have its issues. Every house is going to have something. You know, you can call it charm. You know, I would think of a couple other names, but it's definitely something that we're going to check out. Okay, So those are the things that you have available for you. A two unit condo, if we were going to convert it into condominiums, the cost would be roughly $5,000 to $10,000 to be able to do that. Okay, but then you might be able to get, $350, $375 each unit, and that would, go a long way to, solidifying your real estate investment. You could then sell it, sell both, take the profits, and go elsewhere. Okay, so that's an important thing. I want to show another listing here, and that's 15 Phillip Street in Haverhill. I happen to be very, very long on Haverhill. I think Haverhill is a great place to invest. What do I like about Haverhill? Over the past, I've been saying I'm long on Haverhill since 2018, and I have really seen that community just kind of just build itself up, and there's a general restoration going on, and the property taxes are so very low in Haverhill, in Lawrence, and Methuen, down into the lower valley in towards Lowell. The property taxes are very, very low, and that goes a long way in whether or not your home is going to turn a profit, or is it going to be, a more expensive thing to be able to do so. So 15 Phillip Street is just your classic double decker, as we say here, right? So it looks like you can come in the front. This person's going to go right upstairs, do their thing, and this person's going to be all happy down here. It's a 2-family in a fabulous location. Phillip with 1 L happens to be that location. And how do the numbers look on that one? We have a purchase price on this one of $599, interest rate 6.75. Again, we're very, very large in the payment at 46, 33, 46, and we're using conservative numbers here. Property taxes is not conservative, it's actual. It's 1/12 of the annual amount at $459 a month, and then we're using $200 a month for homeowners insurance. But we're going to go through the same process here with showing with what it would look like with an annual lease. Okay, so that would look like with an annual lease or a monthly lease, conservative amount of $2,200 a month. That's going to knock your participation down to $2,433. Is this life-changing? No. Is it? But it doesn't tell the whole picture, and that's what we want to talk about. For the remainder of the call is all of the benefits that go along with owning investment property. So say you didn't want your rent to be, no more than $2,500, or your mortgage payment rather, no more than $2,500. This one's right at the limit right here, $2,433 for each and every month that you're in the property. But some of the other benefits that you have, I'm going to explain right now, and then we're going to circle back to this right here. So a question that I have for anyone that can chime in is, what is the biggest expense you have? Not specific, like your, whatever. A general question of 100 people surveyed, top answer given for what is the biggest expense that you have. Can anyone just blurt out some things? I know the girls all know the answer, so they would be showing off.
Rent.
Okay, rent's a good one. Molly, thanks, even though you know the answer. Appreciate that.
Heating costs and electricity, just utilities, especially on the 2-family or a 3-family.
Yeah.
And if the utilities are not separate, and they cover that as part of the rent, that could be very expensive depending on what kind of global warming we experience or not.
Global warming week with freezing weather and skyrocketing fuel costs. Yeah, all
Exactly.
that. So there'll be no drama. The answer is just simply it's taxes. I had this little video that I was going to play that Catherine made, but it just wouldn't stream very well. But it's all about this guy grabbing your money. We pay way too much money in taxes. Okay, we pay our paychecks get taxed. We go to the store, we get taxed. We buy gas, we get taxed. We pay excise tax on our vehicle. We pay tax for everything. Everything's a surcharge. Everything we purchase. The amount of taxes that we pay is truly insurmountable. And the only way that you're going to improve cash flow long-term is if you reduce the amount of taxes that you pay. I'm not one of these zealots that says, don't pay the government. I'm all about paying my fair share of taxes, but I'm also very familiar with what the rules are of what is a deduction and what's not a deduction. And I've been able to dodge quite a few expensive scenarios in the past by just reading and learning and understanding what the rules are. So this is why I get excited, okay? You have a rental property, you are now able to file what is called a Schedule E on the property. A lot of people that I talk to surprisingly say, I'm going to rent out the property, but I'm not going to report it because I don't want to pay any tax on it. Or an attorney that I work with has a rental property that she doesn't use her accountant told her to not file a Schedule E because she would have to end up paying more taxes. I showed her a couple of things and she fired her accountant. This is the most important reason for owning real estate on the tax side. It is basically a profit and loss of the property that will help you reduce your taxes. So this is what a blank one looks like. And now this is an actual one from a client that owned a couple properties, and I'm going to show you what this looks like. So one of his properties generated $23,100 in revenue, while the other one was a bigger deal at $35,300. Okay, there is a deduction called depreciation. This is what we call a non-check writing deduction. You're able to deduct the value of the property by 27.5 years. I know it's confusing, but let's just say an example of it's a non-check writing deduction. So each and every year that this client owns the property, each of these property is going to have this amount of a deduction for 27.5 years. Why does that matter? So if you take all the regular expenses, the insurance that he paid, the taxes that he paid on the property, the mortgage interest that he paid on the property, very little repairs needed on either property. But my point is that it's all deduction. So if you add all these amounts together, we're showing that this veteran, or this client rather, lost $25,000 on his rental property, okay? Did he really lose $25,000? No, because we have just about $25,000 in non-check writing deductions. So this $25,000 is going to be a total reduction or a decrease of the amount of taxes that the client will pay. So this particular client had W-2 wages of $86,929. We had to add in some dividends, as income. But then we're going to take this loss right here, and instead of paying tax on this amount right here, we're deducting that, and our adjusted gross income, also known as AGI, drops down to $63,504. That's what we're talking about, folks. We're talking about paying less money in taxes. And by having a real estate property, an investment property, it'll allow you to pay less on your taxes than you are now. Another example of what this looks like is someone here that was showing a $9,000 loss on the property. They were otherwise profitable, more or less, but they had $6,436 in deductions just for repairs. Okay, so you own an investment property. So say you're back to the property down Salisbury Beach, and you no longer occupy the property, but it's straight investment. Every time you drive to that investment property, it's a tax deduction for you. You're able to deduct the mileage and everything that would be out-of-pocket cost to care for that property. So that's one of the many benefits of having real estate as an investment is you will get income from it. You'll be able to get the depreciation that I so very well covet. You will get the equity. So you buy a house, my client paid $475. Say the house is now worth $650. So we're looking at $175,000, appreciation in the property. That's cash. You can also use leverage. You can pull money out of one of your properties to purchase another. I've done that a couple times in the past, and it just gives you many options. When you have real estate as an investment, the options are pretty much not limitless, but there are quite a few, down to the converting of condos to the Airbnb, and the whole while reducing the amount of federal income tax that you pay.
I have two questions. So one, can you file a Schedule E while you're living in the property if you are also using it as a rental property?
100%.
Yes, okay. And then the second question is the depreciation expense calculated on the initial property value or the current property value?
It goes by purchase price, the amount that you paid for the property. So if you paid, $400,000 for a property, as I look for my calculator, 27.5 years, you divide that amount by, and that's the line item of deduction that you're able to deduct on the Schedule E.
If somebody on the call or someone listening to the recording wants to get started, wants to move forward with the pre-approval process, some people are more geared towards, filling out an online application. Other people want to come in or talk over Zoom or have a call. What are their options for applying and getting you the documentation that you would need in order to make, the best, most accurate pre-approval that you could provide?
I would just ask the client, the veteran, what they prefer. Do you want to come into the office? We can, put numbers on the screen and talk through things. Do you want to do it by Zoom, or do you want to just do everything online? Whatever it is, works. I do say that I do lean towards an in-office visit for something like that. It's our job and our goal and our mission to make sure that every client that buys a house has a full understanding of what they're getting into. And a lot of people get overwhelmed by the numbers and what goes into it. And sure, you can jump on and you can Google everything you want, and you can get 14 different answers to the same question. Meeting in person and talking through things, putting fears, setting aside the fears that somebody may have, and realizing that, when you have a better understanding of it, you truly make a more successful homeowner at that point, because you're ready to go and everything has been explained, and all that good stuff. Last thing I want to just show is that Fairway is as a company nationwide, we love our veterans, and we don't just say that, we actually put our money where our mouth is. And the American Warrior Initiative is a nonprofit that we started many years ago, and our whole goal is to give back to our veterans. So a lot of our employees, that total at one point in 2022, it was 10,000 nationwide. A very, very large portion of the employees has payroll deductions taken out to go and fund the American Warrior Initiative. And what do we do with that money? I got to tell you, we are most certainly all about the dogs. We're a company that has gone to the dogs. Our thing is service dogs for veterans that need them. In 2022, we're on track to deliver 100 service dogs nationwide. I can't even tell you how important that is for me personally. I'm a huge animal lover and advocate, and we gave a dog to a veteran here locally. I can't remember if it was Haverhill or Danvers or wherever it was, but it was not a dry eye in the place. I'll tell you that right now. And we do this out of love and our job and our mission to give back to our veterans. Here's another picture of that. I was just so blown away. This is a U.S. Marine that was surprised with a service dog. It was a video. I just did a screenshot of it. I was like, oh my God, look at this dog. He's so handsome, so awesome. I didn't see this little guy in the side over here, all put out, all jealous that the big shot coming in with the fancy American flag collar is killing a show. But we love dogs. We love, very passionate about what we do and what we give back. And I just want to say that there's no such thing as a stupid question. We're here to help. We've helped many clients in the past change the direction of their financial future, their retirement, and how they plan for it. And all we want to do is educate you. We want to give you as much information as you need. I don't care, honestly, if you end up using us as a lender. But I feel that once you talk to us and hear everything that we're about and what we provide, you know, we have a successful track record because of that. So I just want to conclude by thanking everyone to take time to look at this face for the past 55 minutes. And, you know, again, thank you for your service. Thank you for all that you've done for us.
And the website is very simple. It's homemortgage411.com.
This is our baby. This is all
Yep.
Shalimar. Again, we have the team right here, but there's a whole section on real estate investing. And these are the things that I want you to draw your attention to. We publish an investment property of the week. Purchase or punt is the series that we call it. And we actually, the reason why I'm so, I love this so much is we pull actual listings as they hit the market. So take a look at this, take a look at our resources. We have free downloads. We're not going to ask for your email address or anything like that. We just want you to have the information as readily available as possible. But I would like to, you know, offer this as one of the best things that we can do to help our clients understand numbers is to have you find a listing that may interest you, find a 2-family, 3-family, 4-family, and just send it to us and have us run the numbers for you. We can make a custom, you know, report of what the numbers look like and talk you through any questions that you may have. Again, just thank you everyone for attending. We appreciate you.